Welcome to EV Hub Live, a live video podcast for professionals advancing transportation electrification. To find out more about the show, visit atlasevhub.com/live. On today's episode, we'll hear from Corey Cantor, a senior associate at Bloomberg New Energy Finance, to discuss the recently released 2024 electric vehicle outlook. Electric vehicle sales continue to grow globally, but some markets, including the United States, have seen a decrease in the pace of electrification. We'll talk to Corey about this trend and others covered in the report, such as the pace of public charging deployment, the breakdown of EV sales by battery electric vehicles versus plug-in hybrid electric vehicles, and EV investment and market opportunities. Here's your host, Atlas Public Policy's founder, Nick Nigro.
Welcome, everybody, to another episode of EV Hub Live. I'm your host, Nick Nigro, and I'm really excited to have a one-on-one conversation with Corey from BNEF to talk about their recently released EV Outlook report. Welcome to the show, Corey.
Great to be talking with you guys this afternoon. Beautiful weather up here in New York, maybe a little bit hot, but always good to talk EVs, and always appreciate your leadership in the space. So excited to chat.
Hey, same to you, Corey. Yeah, I would say it's a beautiful day in DC, but it's probably pushing 90 again. I think we almost hit 100 yesterday, so lots of t-shirt wearing these days. So let's get into your report. It just came out. It talks about a lot of the major trends in EVs. There's a increased attention in the press in particular about what's perceived to be a slowdown in EVs. And I want to jump right into that. There's a great chart, which Nicole's pulled up here for us, that shows basically growth in some countries and a slowdown in others. Help us make sense of what we're looking at here.
Yeah, so I think the big picture takeaway for everyone listening is really this idea that the EV transition is happening, but it's happening at different speeds in different places. So as you guys can see on the chart, you look at India and China, it's really still full steam ahead. Obviously, China being the world's largest EV market, still hitting 37% growth year on year in the first quarter of 2024 is really good. And India, maybe a surprise story in terms of folks thinking it's a long ways off, much lower base than China, but still almost 40% year on year growth. So they're steaming ahead. Then you look at Europe, you take a look at, say, UK and France, 15 to 20% growth. Those are the larger, along with Germany, EV markets in Europe. Maybe not seeing kind of 50 or 100% growth, but still moving ahead, even with subsidies kind of being phased out and maybe less policy involvement. And then you look at US and UK, US and UK, and US and Spain, really more flat growth. In terms of the US market in particular, I think a lot of that in the first quarter was driven by Tesla and the challenges that they're facing here, given that Tesla makes up around 50% of the battery electric vehicle market, 50% of BEV and PHEV. And when we at BNEF talk about EVs, we're talking both battery electric and plug-in hybrid electric vehicles. So not great in terms of how you look at the year. We expect the US to rebound, for example, to around 20% year-on-year growth as Tesla kind of rights the ship in the second half and other automakers kind of shift through and begin scaling up. And then you look at some markets where EV sales actually fell year-on-year. Germany is the big one. They ended their subsidy, and so it's been a little bit of a more tricky, I'd say, gambit. Japan has been an EV laggard, so 9% down year-on-year, not really high EV sales. And in fact, in our outlook, we do see them trailing. And in Italy as well, subsidies having some impact, but really, maybe more of a surprising growth. Not a huge market necessarily, and one more tricky to electrify. So again, you look at the whole chart, it's a mixed bag. But here in the US, I think there's a lot of work to do on charging, and we can get into that. But it's not like everyone is falling off a cliff. And as you can see, China's really still steaming ahead.
Yeah, and I think that those who are looking for the U.S. and in Europe to be leaders here, this chart's concerning, right? You can see some markets in Asia growing very quickly, and what appears to be a slowing down at least in the U.S. And apparently in Germany as well. And you mentioned Tesla, as part of the source of that. What's the story with some of the other autos? I mean, is it really just Tesla's sales are decreasing and others are increasing and they're just not able to put out enough product?
So I guess quick follow-up on that, thinking just US market there or writ large?
Yeah, just US.
Yeah, US in the first quarter in particular, it was also the Bolt transition, meaning Bolt going out, GM not filling it at that point with Ultium products like the Equinox. We were chatting a little bit earlier about potential issues with dealers around the recent hack, and so maybe you'll see that bleed into Q2 a little bit. But GM in particular is one to watch to see how they're able to scale up. May was their best month of EV sales ever, including when the Bolt was kind of at its peak. So there's reasons for optimism as it pertains to kind of the near term. And then finally, VW was another major reason. The ID4 was in and out of the Inflation Reduction Act tax credit in the first quarter of the year. But to kind of illustrate for folks, US EV growth in 2023 for the full year compared to 2022 was about 50% year on year. So going from 50% year on year for the full year down to about 4% in the kind of preliminary quarter numbers for Q1, that's a big drop. What I will we expect US EV growth to be about 20% year on year for all of 2024, and I think that's pretty close to consensus view. Although we kind of pulled and lowered our consensus outlook for the year after some of these kind of automaker hedges that we can get into.
Yeah, speaking of the the auto hedging, some of them have tempered their enthusiasm a little bit in recent months, saying, oh, maybe we won't go all electric as quickly as we said. We'll be selling combustion engines in the 2030s when, a year ago or 2 years ago, they were saying differently. Can you walk us through that? Who's saying what and where's their ambition today?
Yeah, one of my favorite stats, Nick, was that essentially between 2021 and 2022, you saw 17 automakers announce their intent at some point in the next few decades to phase out gas car sales. Since the beginning of 2022, you've seen zero really new announcements. And if anything, to your point on hedging, Cadillac, as one example, by 2030, kind of saying, not completely pulling back their target, but maybe we can't meet it. GM overall has said, 2035 was an aspiration, which if you check the fine print, it always was an aspiration. Another big one was Mercedes-Benz. So they had about 100% EV target for 2030 and a 50% target for 2025 previously. They pushed the 2025 target back to 2030, and then the 2030 target disappeared into the ether. And if you look at the new 2030 target, it basically says 50% EVs X hybrid, which could mean conventional hybrids too, right? Yeah. So there's always been a bit of, I'd say, an opaqueness around targets. I don't think that the point here is for me to be mean to GM or Mercedes-Benz, but more so to say automakers setting targets is a good way for the public to judge if they're meeting their goals. And also if they're moving to kind of cleaner energy or cleaner transport sources. In terms, yeah, sorry.
I wanted to pull on the thread a little bit about Mercedes, just because, there's been some attention put on the lack of success of the EQ series and EQS and in particular. And I wonder, they also recently were making statements to the effect of the next version of this vehicle will look a lot more like a traditional Mercedes. So the question is, to what extent is the slowing down that we're seeing not a tempering of enthusiasm from the consumer, but more about EVs generally, but more the actual product that's available to them today is not what they want?
Yeah, I think that all ties into pretty much every aspect of the debate around electric vehicles and which automakers are actually giving it their best shot. Different automakers have taken different strategies. Some have gone for, we want to do more new. We want to do a kind of line that you wouldn't expect to see. Maybe Ford's a good example with the Mustang Mach-E. It doesn't really look like anything that they've done before, but they've also delivered a kind of F-150 Lightning for that kind of traditional experience. GM, the Bolt story is so fascinating because GM had the Bolt, didn't really appear to have great enthusiasm for it because it was losing so much in terms of an individual per model. Then soon as they kind of said they were going to discontinue the Bolt, there was a outcry saying, no, we want the Bolt and we want it back. GM kind of reverses course. But the release of the Equinox and the Silverado is kind of more of that strategy of we want to give consumers something that they're comfortable with. In general, got to make a good product.
Say, just the Bolt thing was very interesting to me because big companies like GM typically, it was unusual for me to see them change their mind so quickly on something like that. Usually they know how their customers are going to respond, and that kind of makes me think about the potential for there being a lot more customers out there that might be new customers to the brands that are just waiting. And the Bolt customers could be a good example of that.
So many of these EVs are still too expensive as well. I mean, we did a report, not with the EV outlook, but in around when Tesla was kind of making a lot of decisions around, will it offer a cheaper model or not? And really the Model Y at that point was with the IRA credit was about as cheap as it got for their lineup, around $36,000 or so. Tesla was still missing out on 30% of sales in 2023 that happened below that $36,000 price point. So I think it's a combination of people want better product, but they also want it more affordable. And then charging is another bucket. In a whole conversation, we could take 30 minutes.
Yeah. I'm not sure how much we'll be able to get into that, but yeah, that is clearly a barrier still. Let's turn a little towards what we can expect in the near term globally in terms of sales moving forward. So here's your projections that we're showing here on the screen. I'd love for you to kind of walk us through it and how it looks different than what you were thinking would be happening just several months ago or even a year ago.
Yeah, no, and thanks for asking. And yeah, there's no better way, I think, to kind of illustrate it than looking at these charts. So on the left, you have passenger EV sales, so BEV plus PHEV for the kind of global main regions. Last year, we had about 14 million EV sales, so not too bad, up to about 16.6 million for 2024. This is a slight tempering from what we had at the beginning of the year. A lot of it driven by, I think, the challenges in US and Europe. And we expect that by 2027, about 30 million passenger EVs will be sold. So it is kind of wild to think that like in 2022, there was only 10 million, and you're going to triple the kind of global EV sales in about a 5-year period. And on the right, you have passenger EV share of sale. And I think that's even more clarifying for the audience here. This is a China and Europe story for the main part over the next 5 years. China, we've seen in some months is hitting, more than 40%, approaching 50%. So that's real. 1 in 2 cars almost electric. By 2027, we expect China will be about 60% passenger EV share of sale, which is mind-blowing. Europe at 41%. And then if you squint a little bit, you can see the US is just still below that kind of global average, which is nearly 1 in 3. But the US should be by 2027 under current policy around 29% EV share of sale. And then you have other markets like your Canada, your South Korea, kind of in the same realm. And then really the laggards are more of your kind of Brazil, rest of world category, Southeast Asia. You even have Australia with their kind of newer policies ticking up a little bit. But moving in the right direction. I just think China is so far out ahead already, and they're under our outlook expected to continue to speed ahead.
Yeah, I think the chart on the left with just the total sales is staggering. Just when you look at how many vehicles are purchased in the U.S. every year, it's somewhere near 16 million or so. That's the pace we're on, I believe, at the moment. And so by 27, you almost have twice as many EVs sold globally as all vehicles purchased in the U.S. It's clearly a very large and growing market, and it just seems to be. We're still lagging in the U.S. at least. Is that your take, or?
Yeah, no, I think so. And even with the Inflation Reduction Act passed and the fuel economy standards, and again, this is all assuming that policies will continue to persist. We know from the previous Trump administration, if Trump were to win, it's likely that fuel economy standards would be relaxed. IRA and bipartisan infrastructure law, we will see what happens with those. We always tell clients it's a lot harder to repeal laws of Congress, so it would probably be a messier process. But even still, the U.S. outlook, this is where we're at today, and we'll see where we're at for next year's report.
Yeah, can I just ask, when it comes to, I'd love to talk more about what's going to go on in the 2030s based on your report. If we could switch to that one. What are your assumptions going into predicting that far out into the future, particularly with a market like the U.S.? Our audience is obviously really familiar with them. Some people, I'm sure, have some amount of concern over the tax credits that are in place, and will they withstand changes in the political dynamics in the U.S.? What is this based on? What are we assuming here?
Yeah, so to give you guys like a little bit of kind of background knowledge, when we do our annual outlook, we have 2 kind of separate procedures or work around both the near-term forecast. So that's that kind of 2024 to 2027 view you just saw. That's a lot of bottom-up modeling. So that's literally going automaker by automaker, who receives the tax credit. what our growth expectations are for each individual model. Do we assume, for example, that Tesla's bringing on a new model next year into 26? Rivian's R2, what do we think the market is for that? And we kind of base it on both the kind of growth of those models to date, or what a new model in that segment might look like based on price volume maps that we have from our Bloomberg data. Then from 2028 onwards, at this point, we use more long-term data like GDP, those price volume maps, the long-term kind of price of batteries from our battery price survey. And we throw it into our kind of long-term view, as well as that kind of EV share of sale from that last year of the short-term outlook. And we say, okay, if the US ends up at 29% based on our near-term outlook in that last year, battery costs continue to come down. Here's what our battery projection is. How much sales would you see in each of the markets? And then you kind of build up each of those sales in the chart on the left over time using our long-term model. And then we have, of course, a separate kind of model around how big do we expect overall sales to go. And in the 2030s, they actually curve downward because of things like robotaxis and shared mobility. So that may be a bit of wonkiness there. You can see the full report methodology. But the US really, under our current view, will begin to outpace the global average by the end of the decade. One thing that has changed is we had the US based on sales in the previous year and how they were growing, surpassed Biden's target of 50% by 2030. Because sales were strong last year, but not as strong as we had expected. We're now at a point, plus the automaker hedging and the kind of pushback of models, for Biden's target not to be met by 2030, to hit about 48% EV share of sale. So again, with rounding, you'd say that's still pretty good. But that's still a shift of about 3 percentage points just based on sales being lower. And sales were pretty good last year.
So can I just emphasize that point for a second? You all are expecting the US to hit 48% EV market share in 2030?
Yeah.
Right now, still. Okay. Yeah. To me, that's like critically important for people to see that there's still incredibly difficult targets, that the administration's put out there that you all expect them still to hit, despite the sort of rhetoric about the slowing of EV sales.
And California, we have an outlook for them in our full report as well. And that's a big driver too. I mean, when you talk about advanced clean cars too, and the stringency there in the back half of the decade, that's a real step up. So even if there was the fuel economy debate, if you're saying those weren't strong enough, the California states are going to push pretty strong ahead. Yeah,
the ZEV states make up somewhere over 30% or so of the market. It's true.
Yeah.
So let's talk about the business opportunity, the investments that are going to come. You all have tried to tally how much the market opportunity is, and it's staggering. It's in the many trillions of dollars. It's hard to wrap your head around how much money that is.
Yes.
But we might. I'd love for you to talk about that, but we can also illustrate it and you could tell us a little bit about what just happened a couple of days ago with Volkswagen and Rivian.
Yeah, so maybe I'll explain the chart first, and then we could talk about Volkswagen and Rivian. In our full report, which good time to plug, folks can go look up BNEF, long-term electric vehicle outlook. We have a public site that has the executive summary available and some key stats. It's great to be able to share that because sometimes at BNEF, the subscriber service can't always do that. Really recommend checking it out. In our report, we have 4 segments that we typically talk about. Passenger cars that we've been focused on, but also commercial EVs and electric buses of the kind of transit variety. And then finally, 2- and 3-wheelers, which are electrifying like crazy. Hundreds of millions of electric 2- and 3-wheelers already on the road today. So we have all of these sales outlooks, and then we have pricing data that we've done in other reports and in our EV outlook. We make some assumptions on pricing. Frankly, pricing is a bit harder just because when you're getting out to the 2030s or 2035, you make some assumptions of maybe like, a couple % decline or slower. And that's what you got to kind of do the forecast in, I think, an accurate way without over assuming kind of a black swan event. And then we come up with this kind of market opportunity. So in the base case, our economic transition scenario, $63 trillion over time from 2024 to 2050. Most of that in passenger EVs, but commercial EVs change a lot over time and become a really good market opportunity. And then in the net zero scenario, where obviously you have higher EV turnover because you got to get rid of those ICE vehicles to reach a net zero scenario, $98 trillion. And so Again, passenger EVs the most, but commercial, nothing to kind of sneeze at. And if we do have regional breakdowns in the full report, and it really kind of mirrors what you would expect with like Europe, US, and China being the bulk of the market opportunity.
Yeah, so let's make this real for a moment for people. What just happened with Volkswagen and Rivian?
Yeah, so VW invested $5 billion into Rivian and a joint venture that VW and Rivian are going to collaborate on around software and kind of back-end electrical architecture. It's just amazing, one, how much money continues to pour into the space. It's a pretty big bet for VW. They've had a lot of software issues to date around their EVs in Europe. Here we only have the ID4 and now the ID Buzz, so maybe it hasn't been as apparent. And then for Rivian, you're keeping the kind of company afloat a bit longer to get to the R2 scale up. None of their fundamental challenges necessarily change, but I think that's also a big show of support from one of the world's leading automakers, right? That Rivian's still going to exist as a company and brings them closer together. Even more surprising is what, it doesn't cover battery and it doesn't cover the kind of autonomous technology. So yeah, $5 billion just for this kind of aspect of it is kind of crazy.
Yeah, it makes me wonder about, Volkswagen picking Rivian as a partner here. And was it because Rivian is a great software company, or is it because Rivian has good EV technology? Because, there's obviously a lot of overlap between the two, but if they're not doing anything with the drivetrain, it's just, I'm just curious, I guess. What do you think?
Yeah, I mean, I think it definitely is a show of confidence in their software tech. And I'm so curious about how many conversations happen between VW and Rivian. I have an article on the list to read after today's call and conversation about it. And also, it's just interesting with Scout, which is a brand that VW is revitalizing and bringing onto the market, I think starting in 2026, but they're going to unveil some models this year. How does Rivian and Scout kind of cooperate or coexist? There's a good grad school term of coopetition. And I mean, this is another example of automakers banding together to kind of move towards EVs who may in other times have just been kind of straight up rivals.
Yeah, and there is a long history of autos, even big autos, partnering together on vehicles. I know, it's not always obvious in the public's eye, but GM and Honda are doing that right now with EVs. Is that right? Isn't that right?
Yeah, they've got the Honda Prologue is built on Ultium, and you kind of have those shared costs. I think the surprising part to me was the software. Right, yes. Like if you would have seen it around battery, be like, okay, that makes sense. I think if anything, it's surprising how many EV companies in the U.S. particularly are going it on their own on batteries. Right, there's a bunch of joint ventures, but GM having 4 battery plants, Ford having 3 to 4. That's a lot of batteries. It'd be interesting to see if they get into energy storage ultimately, but it's a lot to kind of invest in.
Well, why do you think they're doing that? Why do you think they're making their supply chain more vertical?
Well, some of that's Inflation Reduction Act, right, to kind of build up off of and reduce reliance on the Chinese supply chain. But I think it's also because EVs are a big market opportunity, and we know growth is going to be coming, whether our forecast at BNEF is right. IEA has an outlook, but this is the way the kind of world is moving. And so I think everyone wants to kind of learn more about the battery space, and it'll be fascinating to see, one, what other kind of opportunities come, but two, you could see why battery costs will continue to decline just because so many people are kind of pushing out and trying to become more efficient on battery production. And that's before we talk about 45X and all the policies that help drive it.
Yeah, I want to talk about batteries. You all do a great forecast for or at least estimate of battery pricing, I should say, based on your surveys and such. And, data that's been coming out lately kind of shows considerable declines in battery prices, well below what I think, many folks would have expected 5 years ago or so. Can you talk a little bit about what that looks like, particularly some of the newer battery types like LFP?
Yeah, and I will also peg and say I have great colleagues at BNEF like Evelina Stoicu, Yayoi. Really, the whole report is a 20 to 25 person effort. What I can say in general on battery prices is we had about $139 per kilowatt hour as our volume weighted average price for 2023. We do a battery price survey that comes out every December that kind of informs the next year's EV report. And so we've seen battery prices fall 90% over a decade to reach that 139. And then in the EV report, we've seen cell prices out of China in that $50 to $60 per kilowatt hour range, which is just so mind-blowingly low that the overall survey sees, getting to $80 per kilowatt hour globally, more towards the end of this decade. And you're seeing prices like that now. So I think there's like not even kind of wrapping your mind around it. From a kind of US perspective, though, there's a bit of anxiety around that, right? Because if China can just undercut again, you don't want to see necessarily from a US perspective, a kind of repeat of solar where you just can't compete.
Yeah, that was what I was going to bring up is, are we worried at all, at least from an American perspective, and even a European perspective, that China is going to try to flood the market essentially in the way that they did with solar? Because those prices, it's hard to imagine how they're making money on a battery when they're offering it at such low prices right now.
Right. And this is what makes, I think, as much as we talk about automakers going ahead, pulling back on EVs, it's a really tough challenge. It's a really tough policy challenge, manufacturing challenge. And the chemistry change, you brought up LFP, got a good stat from the battery team on just LFP's change in China in terms of a share of kind of overall passenger vehicles there. LFP went from about 5% of all kind of Chinese EV batteries in 2019 up to 41% in 2023. So that's 4 years going up by nearly 8 times. And I think when I've talked to kind of clients outside of the context of the report, it does feel like a major US gap. We've seen Ford and CATL's partnership here. But I think originally the kind of concern around LFP was that it's not as energy dense. So you have to either put a lot more kind of battery in there to go the kind of range that you would expect. But LFP has been getting a lot better. And you can also recharge it more times than nickel-based chemistry. So, my dad has a Tesla. You are told to charge that Tesla up to 85 to 90%, really not go to 100% to save the battery. With LFP, you can go to 100% because you have a lot more wear and tear on it. So the US really, it's got to pick up the pace on that particular chemistry and the new ones.
So that brings up, a question for me about plug-in hybrids, because they've kind of they have a bit of a resurgence happening at the moment. And you could argue that that's coming from a few different directions. One is the perception of a poor experience in public charging infrastructure or lack of infrastructure out there. You also might imagine it being more about the affordability of EVs because all electric vehicles might still be too expensive. I'm trying to weigh that, these perceptions with the realities that you're talking about with prices of batteries and such. So tell us about where, your report is on the resurgence of plug-in hybrids, and is it a blip or is it is there a long-term expectation that they'll be a meaningful part of the EV market?
Yeah, Nick, I was so excited to kind of write. Me and my colleague me particularly wrote the PHEV section of the report, not necessarily all the PHEV forecasts, but a kind of deep dive into it. And there's so much misconception around it in terms of the pricing and how you think of it. From the anxiety standpoint, right, that's not for me as an analyst or anyone, I think, to say how people should feel. I think that's understandable about the concerns around charging. But in terms of just the cost, we basically found both on TCO and upfront cost that BEVs are already, way outpacing PHEVs. And that's both total cost of ownership and last year, really the upfront price, driven by Tesla in the US. But you put a Tesla Model Y compared to a RAV4 Prime compared to a RAV4 Hybrid, and the RAV4 Prime comes out last just because it's still really expensive and you don't get that kind of electricity benefit from a full BEV. The actual conventional hybrids came out looking really good. The case for PHEV kind of resurgence is that PHEVs, particularly in China and Europe, which made up about 90% of global PHEV sales last year, continue to be really impressive. BYD, which I'm sure folks know by now, is really also a great PHEV manufacturer. About almost 50% every quarter of all their EV sales are PHEVs. So while they're dominating BEVs, they're also bringing longer and more impressive PHEVs. So for US, there's a lot of ground to make on BEVs and also PHEVs. The PHEVs in China have almost pretty much a double all electric range of the US ones. So we need better PHEV products too here.
What do you think that when it comes to the auto strategy, is this reinvestment in plug-in hybrids, a compliance effort? Because that was a big part of the, let's say the edits to the final rule for the EPA. And some are saying that these are just going to end up being an easier way for the industry to comply. What are your thoughts on that?
Yeah, well, I'd say is to date, what's funny about the U.S. market is there's only one king of PHEVs in the U.S. market, and it's really Stellantis. I mean, the Jeep Wrangler PHEV and Chrysler Pacifica hybrid are just monster sellers. Other automakers talk about PHEVs a lot, and I won't name them to be nice, but it's the volume isn't there. So it's not to say that you can't have a good plug-in hybrid strategy. I think California's ideas around having 50 miles electric required, that's the right direction. What we found in our kind of report is it's really about electric utilization of the PHEV. So if you are having that PHEV drive 80%, 90% of its time in electric mode, that's great for the environment. You're going to use less material cost, less battery materials overall. And like really from like a climate perspective, if you have a PHEV that's driving like a BEV and the consumer wants the gas for 10%, 15% of mileage, not really a bad thing. Where the scenario modeling gets trickier is that if you have higher PHEV sales and no change in behavior, not good for climate. If you, just like with BEVs, right? The PHEV drivers in the early kind of portion might be more sophisticated. What if PHEV driving actually gets worse and is less on electric mode? Then you just have a less efficient hybrid. Well, yeah, we found a lot of potential oil to be added in that case globally.
Do you all split out the plug-in hybrid and all-electric share in the report? And if so, could you share like where you expect plug-in hybrids to be around 2030, 2040?
Yeah, so basically in the full report, we have BEV and PHEV split out. Last year, and I think it's a good stat point for a US gut check, globally PHEVs were about 30% last year of electric vehicle sales and BEVs were about 70%. But in the US, it's always like about 80-20 BEV to PHEV.
Yeah.
So despite all that kind of talk about it,
right,
the sales haven't really shown up. US, we have PHEVs rising to about 22% in our base case scenario. Obviously, you could have a higher scenario moving forward, but it's more about the high volume models. Until we see high volume PHEVs that people are buying, just like with BEVs, we see two high volume models with the 3 and the Y. PHEV Y is the highest selling, that's Jeep Wrangler PHEV, and there's not anything really close. So,
yeah, I mean, I'm not surprised that your research shows just the higher cost for plug-in hybrids. It's just a significantly more complicated vehicle to make and to operate, and so. Especially with the declining prices of batteries, I was pretty surprised by this resurgence, and I wonder I'm a little skeptical for how long it's going to last.
Yeah, and it's really a resurgence globally that's driven a lot by BYD. So again, if BYD or if someone was to make PHEVs at such a high volume, like if you took the RAV4 Prime and it's a good product, and instead of making 30,000 a year in the US, the normal RAV4 hybrid plus traditional is about 400,000 a year. So yeah, if Toyota's like, we're not going to sell anything but RAV4 Primes, then you might see PHEVs do well. But again, automakers have to make decisions to meet targets, and we haven't seen an indication that they're going to be shifting to fully PHEVs to attempt that.
Well, we're a little over time, Corey, and so we're going to wrap it up. But I just want to thank you again for joining us on EV Hub Live. It was a really, really great conversation. Check out BNEF's report as soon as we get off this show, because it's a great one. Thanks a lot for joining us.
Thank you so much for having me, guys.
All right, and so that brings us to the end of the episode. I'm going to have July off myself, so no episodes for us next month, but we'll be back again in August. Thanks again for joining us, and we'll see you next time.